Hello there. Today we are going to review a strategy that's rather time friendly and therefore it's perfect for all of you who, well, may have a full-time job or family commitments or whatever the case it may be. If you just don't have that much time to monitor your Forex trading charts every day, well, this is a strategy that you certainly want to pay attention to because you just need 10 or 15 minutes a day. Alright, just a quick look on a daily basis to your Forex chart will be more than enough to try this strategy. It's called the Breakout Congestion Continuation Pattern, and like I say, just 10-15 minutes a day is more than enough to try this particular trading technique. Alright? Okay, let's get going. Alright, here's the idea. Basically what we're going to be doing is to draw our typical technical analysis elements such as far as support and resistance goes. We're going to be searching for trend lines, we are going to be searching for ranges, we are going to be searching for previous swing highs and swing lows, okay, basically horizontal levels of support and resistance, etc, etc. It works best on breakouts of trend lines and breakouts of congestion areas. The congestion area can take the shape of a sideways range or also of a triangle, okay, where price is simply entrapped within. Right, we're going to be searching for the initial breakout of that congestion area, and then we're going to be searching for this particular pattern in order to profit from the continuation pattern, okay, from the continuation swing up on the breakout. Right, so again, all you need to do is to search for a level, okay. Again, it can also work as a trend line, price, zigzags in the direction of the trend line. Eventually, we get a breakout, and then we are going to be searching for this particular pattern, which we will be talking about in just a couple of minutes. But at any rate, we will be searching for a breakout in order to try the continuation move. Alright, the continuation move. I personally like to see this type of breakouts or this type of patterns of levels of congestion areas, okay, sideways price action congestion areas or triangles as well. Alright, but like I say, it works on any type of level of support and resistance. You can also try it assuming we have a swing low, okay, in there. Well, once price breaks below that level, alright, then we can also search for that type of breakout congestion continuation pattern. Now, this strategy works best on the longer time frames, okay? I'm talking about the daily charts, the weekly charts, or even the monthly time frame, all right? If you tried it off the daily time frame, which is my recommendation, if you trade it off the daily time frame, we are only going to need 10 or 15 minutes a day, okay, to search for those particular patterns upon a breakout of one of those key levels of support and resistance. The reason for that is because we are just going to be using the close of the candle, right, as far as, well, nailing down our entry, locating our stop loss, and, well, finally locating our final targets. All right, so we are going to be using just the close of the individual daily candles. That's why you just need to come back to your Forex chart once a day. If, on the other hand, you decide to go for the weekly time frame, for the weekly charts, well, you just need to check your charts once a week, once the candle, the particular candle for the trading week has actually closed, which is throughout the weekends. Okay, you just need to take a quick look through the weekends to your Forex chart. Again, 10 minutes a week, it's not that big of a deal. Anyone can actually follow along this strategy. Alright, here's the idea. So we determine our key levels of support and resistance in our charts. Again, ranges, trend lines, previous turning point, previous swing points in the chart, horizontal levels of support and resistance, etc, etc. Then we are going to be searching for the breakout, for the first part of this 3-bar combination. This is a 3-bar combination pattern. Okay, we require 3 different bars playing together, coming along in order to determine that we do have this type of pattern in play. All right, the first part of this 3-bar combination is the actual breakout. We need to see a solid breakout thrust. Let me try to explain what that means. Let's imagine we have a price range where price has been zigzagging up and down, all right, within a particular sideways price action channel. Eventually, we want to see a breakout thrust, well, in either given direction, okay, both to the upside or to the downside. It doesn't matter. The only requirement is that we see a solid breakout thrust. When I mean solid, I mean that the actual breakout candle, okay, the candle on the daily or weekly or monthly time frame, wherever your preference might be, well, that individual candle is a full body candle. That means a bar with hardly any wicks to the upside, hardly any wicks to the downside, or at least short wicks, all right, on either way, and, well, with a long body, okay. If it was a green bar, well, certainly we want to see a solid breakout move, a solid candle, in this case to the upside, okay, up on the actual breakout. We want a solid breakout move. Whenever we see a solid breakout thrust, as per the individual candle, the breakout candle, that means that the breakout is taking place in momentum. In the other hand, if we have our level of support and resistance, okay, again, just imagine it's a range. If we see that bar is, the breakout bar is actually a tight bar with, a small body, some sort of a doji, or maybe a hammer formation, a bar with an actual long wick in either given direction, well, that's not a solid bar. That's not a breakout that's taking place in momentum. The market is hesitant to break through that level. Okay, this is all about price action reading. Whenever you see, a hesitation bar up on a breakout level, it means that the market is not quite ready to breach through that particular level. All right, so what you want to see instead is, well, price moving, within the channel. Whenever it comes to actually break through that level, you want to see this solid breakout thrust as far as the individual candle goes. All right, it means that this breakout is ready to take through. The market is ready to continue, or at least to breach through that level of congestion, that area of congestion. Price wants to break free of that area, and therefore we can capitalize on the actual continuation move, okay, which is the third part, the third candle of this whole pattern. But at any rate, as far as the breakout candle goes, you want to see a solid breakout thrust, again, with a long body candle, short wicks, both to the upside and to the downside, and therefore, all in all, signifying that the breakout is taking place in momentum, in high trading volume. Alright, once we have that breakout, solid breakout candle, we need to search, or we need to see our second candle formation on the following day, or the following week, if you are trading off the weekly charts, which is the congestion part of this pattern. You want to see a tight bar up on the breakout. Again, going back into our range example, right, eventually we get, whoops, sorry, that's a mess of a channel. Let me redraw it once again. Okay, price zigzagging up and down within a channel, within a triangle, whatever. Well, eventually we get the solid breakout bar. Then what we want to see is a tight bar up on the breakout, and always beyond the breakout point. Obviously, this being the breakout point, so what you want to see is a tight bar here, a bar with a small candle and small wicks, basically a small bar, certainly much smaller than the previous one. Okay, you also want to see an inside bar. An inside bar is a bar where the high is lower than the previous bar high, and the low is higher than the previous bar's high. Okay, sorry, low. So basically what we have is the new candle up on the close. Okay, once the bar closes, please remember that we only use the bar closes, and therefore we need to wait for the actual bar to close at the end of the day, or at the end of the week, or at the end of the month. Well, this bar, once it closes, what we want to see is a small bar that's totally entrapped within the previous bar, right? Please note how it's totally entrapped within the previous bar's range, and also, again, small body. It doesn't matter whether it's a green bar or a red bar, okay? It doesn't mean whether it's an up candle or a down candle. It doesn't really matter. What matters is that it's a congestion bar, a small bar where price up on the breakout, okay? Price still is not quite ready to either come back